Fed statements and the bank's stress tests ignite markets. European stocks extend their biggest gains in 6 weeks. Do investors sense rates rising as they cross key inflection points? I'm Taylor Schramps, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Stephanie Lake, Director of Research at The Street, and together we bring you Morning Call Express.
So yesterday, finally, Fed came and gone. We had some of the bank results stress tests. What'd you think so far?
You know, I think a lot of it was expected. I think it's very good news. You get kind of one, overhang now beyond, basically, we're focusing on now fundamentals. We're going away from the regulation, and we have the overhang removed. So basically, I think it's a good thing.
Yeah, it's not hanging over our head. We don't have to worry about some kind of curveball. And I think yesterday the markets responded perfectly. We had that pivot high that we were watching technically. You had that shallow retracement, that shallow pullback. And look what happened here in the markets. The markets ignited. So if you take a quick look at the chart, you will see that we have these two trends that we've been talking about. And if you go to the chart, you will see once again, here it is. We broke finally above this 1378, and technicians talk about key points because these are points you have to trade against. This was that momentum uptrend that we've been following. Here's where they shook things up. We closed below the 10-day, but look what happened. We held 1340. We held the 25% fib retracement, and then for some guys who were short, you guys had to switch gears once we had this nice snapback here and we took back the majority of that down day. And then yesterday, we ignited above it. Very healthy action in all sectors across the board. Something that market participants had to be very happy about.
Yeah, and I think what's important is that these stocks have already done pretty well this year because the economy has done better. But now, again, you get this regulation behind, and now you can focus on fundamentals. So you focus on some of the key quality companies. And, I know we're going to talk about some of our favorites, but...
Yeah, and in those banks that we're going to talk about, we have to actually start going to longer term charts, and that's a good thing. That means we went above some short-term obstacles, and now some of the longer term investors might start feeling better. So if you go back to the chart of the S&P, you will see, I want to give you another level. We go to the monthly chart, which we've done from time to time. We've just eclipsed this area. This was that old pivot high of 1370, took it out of the way, so technically that's good. Next level, I'm going to be watching short term is this 1404, which we're getting close to. And then I think a bigger spot is 1440. That was actually my spot that I had for the year. We're getting there sooner than later, so we might have to make some adjustments. But as far as the banks, you've loved them, you started buying them again. Which are a few of your favorite ones?
Yeah, so JP Morgan clearly is one of the best companies out there. US Bancorp is also another, and American Express. Those are the three that I think really had very solid results in terms of they've had good fundamentals, and now they get to share, to bring shareholder value. And I think the news on all of them was really a little bit better in terms of the buybacks, not so much on the dividends. I think the companies want the flexibility in terms of using their cash when it's appropriate, right? When their stocks get hit, they can then go in the market and buy back stock versus dividends, which I think they're going to be slowly, steadily improving.
Exactly, and they were rewarded yesterday.
Yes.
And as traders, you want to look for relationships, and JP Morgan has been the one leading the group. If you take a quick look at the chart here, this helped me as a trader because it led me to believe that we could go higher. This made a higher high 2 days ago before the markets, and then yesterday exploded. You want to talk about USB? I don't even look at that. Thank you for raising it. Look at this point. Look at this through 30. So if you, as an investor, you could have been sitting in it. As a trader, you made money on the explosion. We can get into a lot of the other banks, but they all participated well and they all responded well, and all the groups are responding well. I think you have the cyclicals also that are on the move.
Yes, again, it's the same theme of the macro economy is getting better, right? Jobs getting better, housing getting better, manufacturing continuing to improve. So you have to like the cyclicals if that is in fact, if you believe that these metrics are going to continue, which I do. So I like Cooper, and I also like Broadcom.
Yes, two names that are very familiar. You talked about buying the dip in Broadcom,
Yep.
I think like a few weeks ago, and you got paid. If you look here at Broadcom, some things you could buy on the dip. You buy on the dip at 34. Obviously now, this is going to be above resistance. It's part of the Apple food chain, which has been unbelievable. We talked about the pivot here above 348. Look at it here, and it's opening up 7. I am long Apple. I'm probably going to pare it down because we have quad witching tomorrow, so you have to trade around it. And lastly, rates started rising yesterday. A lot of people have been talking about short TLT, long TBT. I went long the TBT yesterday. Do you think that investors are finally sensing that rates can go higher?
I think the bond market is. And again, you go back to the bond market leads the stock market, and the economy is getting better. So that's the theme, and that's what it's pricing in, starting to price in at least.
Yes, and we're going to go well into this in much more depth in the long form version. Tune in later today.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.